It is January 7, 2026. And while you were watching the S&P 500 hover near record highs, something terrifying just happened in the shadows of the financial system. Imagine walking into a casino in Las Vegas. You walk up to the roulette wheel. But instead of betting on red or black, you place a chip on coup d'etat. You bet that a foreign government will collapse within 48 hours. The pit boss laughs at you. The odds are 100 to 1 against it. But you don't care. You place the bet anyway. Why? Because you know something the pit boss doesn't. You know that in exactly 3 hours, the President of the United States is going to announce a military operation that guarantees that government falls. This isn't a hypothetical. This literally just happened. Last week, as 2025 faded into history, a mysterious trader on a platform called Polymarket dropped $33,000 on a contract betting that Venezuelan President Nicolas Maduro would be removed from power. At the time, things looked stable. The market was dead. Then, boom. President Trump announces the operation. Maduro is in U.S. custody. And that trader? They walked away with over $400,000 in profit. A 1,200% return in a weekend. Was it luck? Or was it the most blatant case of insider trading since the 1980s? Ladies and gentlemen, welcome to the prediction market supercycle. We were told these platforms would be truth machines. We were told they would save capitalism. Instead, they've turned the entire geopolitical map into a casino, and your retirement account is sitting right in the blast zone. Today, we are peeling back the layers of the hottest, most dangerous asset class of 2026. We're going to look at how Wall Street and Silicon Valley built a $100 billion gambling engine disguised as insurance. We'll look at the assassination markets that are legalizing hits on CEOs. And most importantly, I'm going to show you why this data might be the only warning you get before the next market crash wipes out your 401k. Buckle up. The house always wins unless you know how to count cards. Let's rewind a bit. If you've been following this channel, you know we've talked about the financialization of everything before. But in 2026, we have officially jumped the shark. For years, Silicon Valley hype merchants, the same guys who sold you NFTs in 2021, have been pitching a new vision. They call it prediction markets. The two heavyweights you need to know are Polymarket and Kalshi. Here is the pitch: traditional polls are garbage. Pundits on CNBC are liars. The only thing that tells the truth is money. If you force someone to bet $1,000 on an outcome, they stop lying to themselves. Therefore, if we let people bet on everything: elections, wars, interest rates, corporate bankruptcies, we will create a truth machine. A crowdsourced superintelligence that knows the future before it happens. And Wall Street? They ate it up. By the end of 2025, the valuations of Kalshi and Polymarket doubled, then doubled again, hitting over $10 billion each. We aren't talking about niche crypto startups anymore. We are talking about institutional heavyweights. The Chicago Mercantile Exchange, Intercontinental Exchange, the literal plumbing of the American financial system, has poured billions into this sector. Why? Because they see a goldmine. Jeffrey Yass, the billionaire behind Susquehanna, put it bluntly: we think insurance is a tremendous area of growth. Think about that word. Insurance. The argument goes like this: if you are a homeowner in Florida, you can buy home insurance, right? But what if you could just bet that a hurricane will hit your zip code? If the hurricane misses, you lose your bet. If it hits, you win the bet and get a payout to cover your repairs. No claims adjusters, no paperwork. Just a smart contract triggering a wire transfer. It sounds beautiful. Efficient. A civic good, as the founders like to say. They claim this helps ordinary people hedge against the chaos of the modern world. But let's look at what is actually happening on these platforms in January 2026. Are people hedging their mortgage risk? No. They are betting on whether the Atlanta Hawks will beat the Pelicans. They are betting on which character will say a swear word in the next episode of South Park. They are betting on whether Jesus Christ will return to Earth this year. I wish I was joking. There was literally a market for the second coming of Christ in 2025. And guess what? If you bet against Jesus last week, you cashed in. Congratulations. The reality is that 90% of the volume on Kalshi right now isn't hedging geopolitical risk. It's sports betting. It's gambling. But because it's wrapped in the language of derivatives and binary options, it's being sold to you as sophisticated finance. And this matters to your wallet because capital is finite. When billions of dollars flow into these casinos, that is liquidity leaving the boring, stable markets that actually fund businesses. But the real danger isn't the sports betting. It's what happens when these truth machines start getting fed lies. Let's go back to that Venezuela trade I mentioned in the beginning, because it exposes the rot at the core of this system. We have seen this movie before. In 2008, the banks created complex derivatives that nobody understood, claiming they made the market safer. They didn't. They just hid the risk until it blew up. Now, in 2026, we have a new problem: thin markets. Unlike the S&P 500, where trillions of dollars change hands, these prediction markets are often small. Thin. That means a single person with a big bankroll or inside information can move the price. When that trader bet on Maduro's capture, the market odds implied a near zero chance of a coup. The moment the money hit the table, the odds spiked. Here is the nightmare scenario for the average investor. Imagine you are a legitimate trader watching these markets. You see the odds of a Venezuelan coup spike from 2% to 80% on Polymarket. You assume the wisdom of crowds knows something. You panic. You sell your oil stocks because you think supply chains are about to break. You dump your emerging market ETFs. But what if there was no coup? What if it was just one guy with $500,000 manipulating the chart to trigger a panic, so he could short the S&P 500 on a different account? This is called reflexivity. The bet changes the reality. And it's not just Venezuela. Look at the Trump-Greenland trade. Since the start of the year, odds of the US acquiring Greenland jumped from 6% to 11%. Is there a secret deal? Or did someone just drop a fat finger trade? Look at Iran. Bets on Ayatollah Khamenei being removed from power doubled from 19% to 35% overnight. If you are a portfolio manager in London or New York, you have to watch these signals. You can't ignore them. But you also can't trust them. We are entering an era of algorithmic warfare, where bad actors can manipulate prediction markets to crash real-world stocks. And the regulators? They are missing in action. The Commodity Futures Trading Commission, the cop on the beat, is currently a ghost town. Following the political shifts of the last 2 years, the commission is understaffed and largely defanged. Kristen Johnson, a former commissioner, warned us before she left in late 2025. She said the agency has no clue how to police this. We effectively have one Republican commissioner running the show, and the philosophy of the current administration is let it rip. And ripped it has. Donald Trump Jr. is arguably advising these platforms. The president's own media company is launching a prediction market. The lines between the White House, the regulators, and the gambling dens have dissolved. Now, you might say, okay, but if I'm smart, I can still make money, right? Let me introduce you to the concept of ambiguity risk. In the stock market, if you own Apple shares, you own Apple shares. It's clear. In prediction markets, you are betting on the wording of a contract. And words can be twisted. Let's look at the Person of the Year fiasco from just a few weeks ago. Millions of dollars were wagered on who Time magazine would pick as the 2025 Person of the Year. The favorites were Elon Musk and Sam Altman. But there was a massive dark horse bet on AI itself winning. Traders poured money into AI. It seemed like a lock. Then, the cover leaks. It's a group of people. Time calls them the architects of AI. Chaos ensues. If you bet on Sam Altman, did you win? He's in the picture. If you bet on AI, did you lose? The winner is technically a group of humans, not the software. Here is how the platforms handled it, and this should terrify anyone treating this as a serious investment. Kalshi ruled that anyone in the photo counted as a winner. Polymarket did something even crazier. At the last minute, before the official announcement, they added a brand new betting option, architects of AI/other. Basically, they changed the rules in the middle of the Super Bowl. If you were holding bets on Sam Altman on Polymarket, you got wiped out because the winning bucket was suddenly this new option that didn't exist when you placed your trade. One user, Vekatakis NS, lost everything. He wrote, "You cannot change the rules of the game the day before the final." He's right. But in this unregulated Wild West, they can do whatever they want. There is no SEC here to protect you. If the platform decides the definition of recession or invasion has changed, your money is gone. This brings us to the wallet connection. Why should you care if some gamblers lost money on a magazine cover? Because major financial institutions like Robinhood are diving headfirst into this. Vlad Tenev, the CEO of Robinhood, just announced that they are entering the prediction market supercycle. They are acquiring a derivatives exchange. They want trading to hit trillions of contracts. They are pitching this to the same young, retail audience that got burned on GameStop and Bed Bath & Beyond. They are gamifying macroeconomics. We are seeing a generation of young men who believe the system is rigged against them. Housing is too expensive, wages are stagnant, so they view speculative gambling as their only ladder out of poverty. But unlike the stock market, prediction markets are zero-sum. For every dollar you win, someone else must lose $1. There is no dividend. There is no earnings growth. It is a knife fight in a phone booth. And right now, you are bringing a plastic spoon while the insiders are bringing machine guns. If insider trading and rigged contracts aren't enough to worry you, let's talk about the darkest chapter, the death pools. Economists have warned about this for decades. They call them assassination markets. If you can bet on anything, you can bet on death. Recently, Polymarket hosted trading on whether the Houthi militias would strike Israeli territory. They had contracts related to the assailant behind the killing of the United Healthcare CEO. Think about the incentives here. If I bet $1 million that a CEO will be assassinated, or that a pipeline will be blown up, I suddenly have a $1 million financial incentive to make that happen. We are crossing a line from predicting the future to influencing the future through violence. The CFTC technically bans contracts on assassination and terrorism. They forced Kalshi to take some down. But Polymarket operates offshore, outside US jurisdiction, using crypto. They can do what they want. And it's not just violence. It's corruption. Imagine a star quarterback in the NFL. He makes $10 million a year. But the prediction market on his next game has $500 million in liquidity. If he throws the game, his cousin could make $50 million tax-free on a decentralized betting platform. Charlie Baker, the president of the NCAA, called this catastrophic. He's terrified. You should be too. This erodes trust in every institution. If a CEO tanks a merger, did he do it for the business, or because he was shorting the merger success contract on Kalshi? If a politician delays a bill, are they doing it for the constituents, or for their betting pool? This is the financialization of corruption. So, where do we go from here? It's 2026. This genie is not going back in the bottle. I see 3 scenarios playing out over the next 18 months, and you need to position your portfolio for them. Scenario 1, the big short event. The prediction markets will eventually be right about a massive disaster that the stock market ignores. Maybe it's a Chinese blockade of Taiwan, or a new pandemic strain. The prediction markets will flash red weeks before the S&P 500 reacts. The opportunity, if you monitor these markets, they could be the best early warning system you have. When the divergence between the gamblers and Wall Street gets too wide, trust the gamblers. They have skin in the game. Scenario 2, the regulatory hammer. The insider trading scandals will get so bad, perhaps involving a US senator or a massive terror attack linked to a bet, that Congress will wake up. They will crush the industry overnight. The risk, if you own stock in the exchanges or fintechs like Robinhood that are pivoting to this, they could see a massive correction. The supercycle could turn into a super crash. Scenario 3, the dystopian status quo. We enter a world where prediction markets become the primary driver of news. Cable news dies. People only care about the odds. In this world, volatility in the stock market increases 10x. Every rumor, every fake screenshot, moves the needle on prediction markets, which then causes algos to sell off real stocks. The strategy, you need to own high-quality assets that can weather volatility. Real estate, commodities, blue-chip companies with cash flow. Do not play the short-term game. The noise is about to get deafening. I want to leave you with a quote from Ken French, a legendary economist from Dartmouth. He's the guy who helped define how we understand modern markets. He looks at this industry and sees a disaster. He says, it's in their interest to convince us that this is going to be an enormous social good. But it's not. It creates risk that doesn't have to be borne. When you buy a stock, you are funding a company that makes iPhones or delivers packages. You are adding value to the economy. When you bet on a prediction market, you are simply transferring wealth from one person to another based on who has better inside info or who is faster. It produces nothing. It builds no factories. It cures no diseases. It consumes the smartest minds in math and finance, and puts them to work figuring out if Leonardo DiCaprio is going to get engaged, rather than how to lower the cost of energy. Cliff Asness from AQR Capital said it best, social media is the most effective vehicle mankind has created for turning a wise, independent crowd into a coordinated and clueless mob. Prediction markets are just social media with leverage. They aren't a crystal ball. They are a megaphone for the mob. So, what should you do? If you are tempted to throw money into Kalshi or Polymarket because you think you know who will win the 2028 election or the next Super Bowl, don't. Unless you are treating it strictly as entertainment, like a trip to Vegas. You are not trading against the market. You are trading against insiders, politicians, and algorithms that see the data before you do. However, do not ignore these markets. Watch them. Bookmark them. When you see a massive spike in odds regarding a war or a supply chain disruption, cross-reference it. It might be the signal that saves your portfolio. We are living through the wildest experiment in financial history. The entire world is being turned into a casino. And in a casino, the only person who is guaranteed to make money is the owner. If you enjoyed this deep dive, smash that like button and subscribe. I'm going to be tracking that Assassination Markets closely in the coming months, because I have a feeling the Venezuela trade was just the tip of the iceberg. Thanks for watching, and as always, guard your wealth.